All right, we are good to go. What's up, y'all? Appreciate you guys being here on a lovely Tuesday evening, afternoon, night, morning, wherever you are in the world. Welcome to another beginner in charting Q&A session. For those that are new to beginners in charting Q&A session, this was the opportunity for those that are new to trading to ask any question that they have. It can be anything related to trading psychology, setups, market structure, anything like that. Now we've switched things. At the start of this month, we switched things to now we have themes related to the beginner and charting Q&A. Last week, the theme was higher time frame triggers and targets. We have that lesson available for playback and recording if you guys want to watch that. And this week, it is broadening formations. How we select themes is through our feedback form that we offer every single month. So all you have to do is let us know what topic you'd like us to discuss. And if multiple people have that or random selection, we can have that topic for next month or something like that. So really do appreciate those of you that have been filling out the feedback form, that have been participating. You know, I want this to be interactive as possible. And this will be available for recording for those that want to watch it, that haven't watched it, or like not here, or for those of you that want to watch this again. All right, cool. So this is going to be interactive. So broadening formations. For those that know a little bit about broadening formations, what would you say a broadening formation is? Feel free to unmute yourselves. Feel free to let me know in the chat. How would you define a broadening formation? What is a broadening? D Money says price expansion. Okay. Anyone else? Anyone else? We got price expansion. Anyone else? I appreciate it. I see a couple of people typing, so thank you. A form of SR, support and resistance. I like that. Cool. That is a great answer. The doctor, in a sense, higher highs and lower lows. So yeah, price expansion. All right. Snowflake, it is a highest high and lowest low. I like that. Momo, LLHH, which I know is lower low, higher high, lower low, higher high. All right. So these are phenomenal answers. And thank you all for responding. You are essentially, all these answers are correct. The beauty about broadening formation is that there actually is multiple definitions within them, and they tell you multiple things. Now, I would say maybe a dictionary definition to broadening formations would be a broadening formation is a chart pattern that is characterized by price action creating progressively higher highs and lower lows. Now, if this is hard to visualize a megaphone. If you think about a megaphone, like what would a megaphone look like? A megaphone would look something like this, right? This is what a megaphone would look like. So this is a broadening formation. A broadening formation is characterized by higher highs. If I take the highs, this would be the high. You got a high right here, and then this high is higher than this high. This high is higher than this high. This high is higher than this high. This high is higher than this high, higher highs, right? And also lower lows. If we look at this, we got the low, we got a low that's lower than this low, we got a low that's lower than this low, we got a low that's lower than this low, we got a low that's lower than this low. Hopefully this makes sense. So that is one way to visualize a broadening formation. Now, when it comes to drawing broadening formations, how I say it, or what helps me draw broadening formations, is that I say that broadening formations should be drawn, hold on, from left to right, from highs to higher highs. So if you're looking at a chart from left to right, and we read price from left to right, we read words from left to right, we read a book, a newspaper from left to right, charts are supposed to be read from left to right. So if we're going to be drawing broadening formations, I particularly draw them from left to right. And they're drawn from highs to higher highs, lows to lower lows, specifically swing highs to swing high, swing highs to swing higher highs, I guess, swing lows to swing lower lows. Now, what quantifies as a swing high or a swing low? A swing high is when price reaches a peak and you have lower highs on both sides. So if you look at a candle and you look at the left of the candle, it's lower than the current candle, and you look to the right of the current candle and it's lower, then that's a swing high. Same thing for the lows. If you're taking a current live candle and the low of the candle to the left is higher than the current candle, and the low to the candle to the right is higher than the current candle, that is a swing low. So now let's take a specific chart example. And this is DIA on the monthly time frame. So I'm going to draw a broadening formation for DIA. And a broadening, if I look at this chart, we can say that I see a swing high right here. Why is this point a swing high? And I'm just going to label this point. Why would I call this point a swing high? And does someone want to let me know? Why would this be considered a swing high? Why would this point be considered a swing high? Anyone want to let me know? Why would that be considered a swing high? Anyone want to let me know? It is the highest high so far. Okay. Anybody else? Anybody else? Okay. Snowflake, it is the highest. Ash, because it's higher than the candle to the left and to the right of it. Okay. All right. It is where price stopped before retracing. Okay, good. All of these are good answers. The candle to the left and the candle to the right are lower. Good. Yes, you are all correct. Now, let me ask you something. Would this be considered a swing high right here? Would this candle be considered a swing high? Yes or no? Caesar says yes. Airman says no. Tone says yes. Paper Trader says yes. Ash says yes. Shike says yes. Okay, we got a couple. We got yes. We got a couple no's. All right. Now, for those that said yes, hey, shout out to that man Caesar. I see you. You doing it, my guy. Yes, you are correct. So it actually is a swing high. And the reason why was because prior to price action and time just continuing to go on, that was a swing high. Now, if you look to the candle to the left, it's lower. If you look to the candle to the right, it's lower. But if you keep on going in time, then all of a sudden price breaks that high. So at this moment, back in what, August 90, that's funny. August 1999, that was the swing high at that moment. But it wasn't until a couple months later where that swing high gets broken. So yes, it was a swing high. But at the, like what Ikar stated, this is the highest point at this current moment. So this would be like the highest swing high at this current moment. So hopefully this makes sense. So I recognize this as a swing high. When I continue with price, I also see that this is also a swing high right here. Hopefully this makes sense. Why? Because this is the highest point, or at least this is the highest point of the time for this chart. So what I can do is that I can draw a broadening formation. I can draw a broadening formation, and with the beauty of trading view, you have the magnet tool. I can draw a broadening from this highest point, and I can connect it to that point right there. This is a broadening formation from this high to this high. That is a broadening formation. Now, this is also a broadening formation right here. That's a high. This is also a broadening formation. That high is higher than this one. This is also a broadening formation. That high is higher than this one. This is even a broadening formation. That high is higher than this one. Why? Why are they all broadening formations? Well, because remember, price progressed through time. This was the highest point for DIA all-time highs. Then 2 months later, price went higher. That's your new broadening. Price went higher a month later. That's your new broadening. Price went higher 2 months later. That's your new broadening. The reason why you see me extending these lines and price going higher, broadening formations are evidence that price expands over time. There was actually, I don't know if it was like 2022, it was like 2022, 2021. There was like this big, I thought it was just fun in games, but like, so like stratters used to say like, oh, you shouldn't be using horizontal resistance and horizontal lines as like pivots because price won't stop there. And the reason why is because broadening formations expand over time. So really horizontal lines should not be an indicator for you to believe that price is going to stop or reverse. However, in reality, that actually is, you can actually use horizontal lines because horizontal lines actually liquidity levels, but that's a different story. But anyway, so the reason why we love using, it was like this thing over broadening formations over horizontal resistance levels, because broadening formations just show that price expands over time. Now, this is for the higher high. Now this is for the high to the higher high for the upper part of the broadening formation. Now, if I take this lower part of the broadening formation, or if I want to see if we have a broadening formation, remember that it's from left to right, and I would be taking swing lows to a lower low. Now, when I look at this, I can see that this is a clear swing low right here, and this is a clear swing low right here. So I can draw a broad, or wait, let's see. Actually, let's see, because to the eye, we got to check the eye test. Is this actually lower? Oh, is this actually going to be lower than this broadening? So it is. Or is this lower than this level? Hold on. This point is at $72.03. This point is at $73.88. Therefore, by definition, this is lower than this low right here. So we have evidence of a broadening formation. Now, what else do I do? And this is TradingView or any of your charting tools. I expand the broadening formation, and I'm going to show you why, or not expand, extend the broadening formation. We know that price expands over time, or price expansion. So what I'll do is that I will extend the right line, okay? And I'll do this for both sides. I'll extend the right line. And what you guys can do is that you can have a template. You can have save, you can save a template, save as broadening formation. You see that I have BF, and I have BF for the month, broadening, old broadening formations, quarterly broadening formations, weekly broadening formations, yearly broadening formations, monthly broadening formations, broadening formation, which is for the daily broadening formation. I have a broadening formation for every single time frame. Now, the reason why is because you want to draw, you'll see, I'll talk about it later, but you want to, or it's highly suggested that you not color code, but you label your broadening formations according to the time frame that you draw it on. The reason is because when price, I'll talk about that later, but when price is at that broadening formation, like near that broadening formation, depending on what that broadening is, if it's a quarterly BF, a monthly BF, or a weekly BF, that broadening tells you how the level of strength of that broadening. So for example, the higher the time frame, the bigger the move. Same thing for broadenings. If you're approaching a yearly broadening formation, you expect a big move from this point. You're either going to break through that broadening formation and having a big expansive candle to the upside, or like this, you'd have a big expansive candle to the upside, or if price comes back goes to this broadening formation, you can have a large rejection and it comes right back down. Okay, so this is one of the reasons why you want to, and that is if you're at a yearly BF. If you're at a weekly BF or even a daily BF, you wouldn't expect a big as a reaction compared to price going towards or being near a yearly broadening formation. So when you see like different lines on people's chart, you're like, man, what is all these colors and different lines? Most likely they're color coding their BS, and they're going to tell you, we're approaching a yearly broadening. We're approaching a weekly broadening. If someone were to tell me, hey, we're approaching a daily broadening, well, I wouldn't pay that much attention to it compared to us approaching a quarterly broadening formation or a yearly broadening formation. Hopefully this makes sense so far. Now, what are the things that broadening formations help with, right? Or what are the functions of a broadening formation? Now, broadening formations, they give us or show us evidence of exhaustion risk. They show us the potential of magnitude or how far price can go. Broadening formations can be used as support and resistance. Broadening formations can be used to show us a potential sign of a reversal. And outside bars or 3 bars are evidence that broadening formations exist. Now, let's talk about the first two, which is exhaustion and magnitude. Okay, now let's go back to this DIA chart. So in terms of exhaustion and magnitude, one of the reasons why we extend our broadening formation is because when you're nearing the broadening formation, that can potentially let you know when the move is exhausted and it can now go the opposite way. We extended this broadening formation. You can now see that we're displacing on a larger time frame to the downside. This is in 2008. Oh, actually 2008. So we know what happened there. Okay, and we're displacing to the downside. Now, as we get closer to this level, because we know a broadening formation exists, we know that we're going to be facing exhaustion risk as we approach that BF, meaning that price can bounce off this broadening formation and go back up. Let's see what happens. We see it again, going. Look at that. Look at that wick at that broadening formation line. Did you notice how price went below the BF, but on this quarterly time frame, we wicked it. Ooh, nice CCRP. Okay, they was doing CCRPs in 2009. Okay, look at them. Okay, and then look at this. Look how that, see, and this is why broadening formations are so cool, because how is it that back in 2003, you were over here, I don't even know if TradingView was out there. You were over here drawing lines and saying like, hey, I'm going to draw this line because I know that broadening formations exist. And then fast forward to 2008, yeah, mind you, we did get below this line on the quarterly time frame, but y'all know how we feel about candle closes. Y'all already know how we feel about candle closes, especially if we're talking about higher time frame thesis. Then you wick the broadening formation and you start reversing back to the upside. So, and now look at this. Now that we're reversing back to the upside, where are we going? Oh no, where is price going? Remember how I talked about magnitude? Number 2, magnitude. Broadening formations show us or tell us or give us insight to magnitude. Based off this reversal right here, if this is back in 2009, someone could have said, hey, I believe that the Dow is going to get back to 150, 146 in 5 years or something. And someone's going to be like, what? 146? But all-time highs is at, where at this time? What was the high? 141.95. All-time highs is at 141.95. What do you mean the Dow is going to get to 146? Well, we have a broadening formation there. And based off price expands over time. And magnitude, you're essentially telling that person, or the broadening formation is giving you insight to magnitude of where price can go. So the reason why we get so like but the reason why we're so definitive on potential price targets in the future is evidence of a broadening formation. And so now DIA, we can see that it's going back up and it is expanding back through the range. And with magnitude, you're not saying that this is going to happen. You're essentially saying that based off this broadening formation that we're trading in, price can go here, 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 anywhere here. And of course, we look for actionable signals that could potentially tell us the direction of where the broadening formation is going to go to. Hopefully this makes sense so far. So that's expansion. So this is the reason why we extend our broadening formation lines, because they give us insight to where price can potentially trade to in the future. All right, now on to number 3, which is support and resistance. Okay, we talked about a little bit of a exhaustion risk, how this was kind of used as support, this was used as resistance. So when price is coming back to the bottom of a broadening formation, we know based off risk in based off of low risk entries, you have a better risk to reward getting calls at the broadening formation, because essentially you're saying, this is what I love. If you got in on the CCRP, you're essentially saying that this is my stop loss, but my potential is all the way like this, right? If you get in at the top of the broadening formation like this, you're essentially saying that, oh, I can take this short right here. Let's say they gave you a CCRP. You're essentially saying that I can take this short. My risk is the top of the broadening formation for all of this potential magnitude. And if price PMGs to the downside, oh, you winning. Okay, now I want to show you something else. And I really hope that TradingView does not screw this over. No, I won't. I can go on a yearly. Don't screw this over, TradingView. You see how we expanded this broadening formation? This was like, you're looking at this on a yearly time frame. Price came back to this broadening right here. And what do we say? Like when you get to the top of the broadening formation, you should be looking for signs of, if you have a sign of, you should be looking for signs of reversal. Now let's see if they gave us a sign of reversal when price was approaching that top of the broadening. Okay, so look at this. You had an outside bar. This is on the quarterly time frame. You had an outside bar close above this broadening formation. Then you on the quarterly time frame. Then followed by an inside bar that held this broadening formation. Notice how many times you wick off this broadening formation line, But every single time, and this is 2020, 2013 to 2014, you are wicking the top of this broadening and you extend to the upside. In 2015, you get a 2-2 reversal back to the downside that actually slices through the broadening formation. But I want to show you something right here. Notice how price is trading above this broadening formation line. And in reality, you could be expanding your trend line. One of the reasons why stratters have multiple lines on their chart is because instead of erasing their broadening formations, they just draw new ones. Because if you know that price has the potential to retrace back to that broadening formation and use it as support or resistance, then why would you leave it on? Then why would you not want to leave it on your chart? But okay, ADEX, but that's going to be way too many lines. Like you're telling me that a line from 1999 really is going to have some relevancy to 2022? Well, let's see what happens. If you look at this, mind you, this broadening formation is from January 2000 to October 2007. And let's see, does that broadening formation have an impact to today's, where are we, 2018? And if you keep going, oh, wow. Outside year. Interesting. Let's keep going. Boom. Look at, whoa, what happened there? What happened there? What happened there? Whoa, let's go back. What happened there? Whoa. Ain't no way. No. There's no way. No. No. Ain't no way. No. There's no way a freaking line from 2000. Nah. What is that? March 2020? Nah. There ain't no way. That can't be. No, you're gonna go past it. Nope, you're gonna go past it. There's no way, right? A line from 2020 holding as a broadening formation as a support. And guess what? Marcus says, buy, that is all we needed. And next thing you know, I mean, history, you guys know what happens now. But look at that. This broadening formation, mind you was trading back in 2007. And you had this line from 2007. You said, and you guess what? TradingView was there and you said, I'm going to lock it. So 10 years from now, I will still have that broadening formation. And guess what? This is what I'm saying is crazy. Imagine if Warren Buffett. Imagine if Warren Buffett had a broadening formation from 2000. And imagine if he was like, hey, y'all, hey, we don't know, y'all. We don't know. They could have been stratted before we knew what strat was. That's all I'm saying. But the broadening formation actually had an impact for that 2020 reversal, for that COVID dip. Believe it or not. People are going to think that, no, this fake is just imagine. No, broadening formations exist. I'm telling you, broadening formations. And the reason why you extend them is because price will come back to a broadening formation and use that support and resistance. My first example, my infamous one, WFC. Oh, snap. WFC. I drew a broadening formation for Wells Fargo from 2005. And I was like, ain't no way this broadening formation gonna hold. And this was back in 2022. And it held. Ever since then, that was the trade to settle the whole broadening formation discussion, debate. I was like, yeah, this thing is legit. If I can use a 2005 broadening formation on a yearly to take a trade and it actually reverses, and it worked, hey, that's all I'm gonna say. So that is why I say support and resistance. Number 3, you can leave broadening formations on your chart. You can move them if you make a new higher high and you just want to make a new, and you just want to move the line, adjust the line accordingly. Totally up to you, but just understand that price. There could be a broadening formation from 3 months ago that could have saved you. There's been broadening formations that I had on my chart, and I'm like, is price really gonna, there's no way it's gonna reverse from here. I drew this 5 months ago and it reverses, and they're like, whoa, that's crazy. So hopefully that makes sense. And lastly is the outside bar. Okay, the outside bar is evidence of a broadening formation. We saw on the yearly time frame or DIA right here. Okay, so this outside bar, once we went outside, this is evidence of a broadening formation because this is a swing high. This is a swing low. Just find the low to the left. Find the high, of course, the low that's higher, the high that's lower to the left of it. Right. And I always say left to right. So if I'm going to, and you can take this high, I know this is a swing high, connect. This is a swing low, connect. Actually, I think we can even, is this one? No, does this grab liquidity? Yeah, it does. Grab liquidity. Okay. And then got the inside 3 month, the 3-1 on the quarter. Oh, and I love this. I love this. And 3-1, and watch this. Y'all know what about the 3-1? Oh, sorry. I know this is not really broad. Actually, yeah, this is kind of like broadening formations. The reason why the 3-1-2 see you later, not the reason why, but one of the reasons why the 3-1-2 see you later is like legit is because of this. Watch this real quick. Because when it does a because you know what a 3-1-2 see you later is doing? The 3-1-2 see you later, when it gets, think about this. So this 3 bar pretty much tells you the range. It tells you the range. And then now that you have a 3-1-2 up on a 3 month, we know this is the entry. Your target is right here. You also know that price expands over time. So essentially, it's kind of cool because you kind of like playing a game with like the market. You're pretty much saying that like, hey, I'm taking this setup because one, I know that one, you can go to target, which is the top of the 3. And 2, because that 3 is essentially the broadening formation of this entire range. If we go to target and price dares to expand the broadening, and now you're in not unwanted territory. Now you're in uncharted territory where, what do they call it? Y'all know, help me out here. Not price expansion, when you're at all-time highs and what's the word I'm looking for? Price discovery. So that 3 bar defines a range, right? The 3 bar defines a range. But when you break out of that 3 bar, you're now in price discovery territory. So you now have like an added probability of like, hey, because we're now in charted territory, you can do whatever you want. So if price wants to continue to go up, it can. So once you get that 3-1-2 up, watch this, and you expand the BF. Come on. Okay. Get to the top of the broadening. See what happens as it approaches the broadening formation. Look at this. Look at this 3-1-2 see you later. Let's see what happens. Now it's at the broadening. And look at, oh my gosh, this is what I'm saying. If I had known, like, see, I learned strat fall 2020. Man, if I knew strat fall 2019, dog, oh my gosh. Oh my, 3-1-2 see you later for all of you. It would have been a 3-1-2 see you later for all of you. Look at that on the quarter, bruh. Like, that's not even fair, dog. And it like kept going. Like, and people ask, why do you like the 3-1-2 so much? Here you go. Here you go. Like, I mean, it hasn't even stopped. It still hasn't stopped. It's kind of crazy. You get a CCRP? That's crazy. 3-1-2 see you later. Still going. Expanding the broadening formation. Price discovery. So, yeah. Let me go back to my notes. Exhaustion risk, magnitude, support and resistance, reversals, outside bars are evidence of broadening formations. All right. So, hopefully that helped. And hopefully that can help you with your trading plans. Any questions? Any questions? Does this help? Does this help with broadening formations? Does this help? Cool. Oh, y'all know me. I can talk for days. See, let me show you this. Also, with broadening formations, just because you see a broadening, I want to show you this example. Oh, this is the weekly? Here. Show you some. Okay. So we know this is evident. There's a broadening formation. CMG. Oh, also about broadening formations, it's think of it like, you know how like with support and resistance, and you also have supply and demand zones. So like support and resistance is like a line, and supply and demand is like a zone. Broadening formations should be, if at least for me, they should be considered more of a zone rather than a line, because you will see a lot of times like price will break through the broadening formation, but then it's just a wick on a higher time frame. Like you guys saw how like DIA broke through it, but then on a higher time frame it ended up being a wick. So think of a broadening formation more of a zone rather than a line. So even though I'm drawing a line right here, it's the general zone that's being used as like supply and demand. Hopefully that makes sense. But the reason why I'm showing this is because price can, just because you know like you're at the bottom of a BF, right here. Just because you know you're at the bottom of a BF, that doesn't automatically mean, okay, go long, right? You still want to use those confluences. You still want those confluences that are telling you, okay, you have the potential, you have the potential to now reverse off the broadening. For example, CMG, you had to deal with like if you had wanted to go long off this 3-1 on the week and you were like trying to anticipate, so you're like, oh, I'm going to get this on this inside week because we're at the bottom of the broadening. We have a 3-1 and we're at the bottom of the broadening formation. Yeah, but guess what? They said, nope, sorry, 3-1-2 down, full time frame continuity to the downside. And then you had a 1-2 down, 2 up reversal, and now you still go back to the bottom of the broadening. So imagine if you had gone on this inside week, you would have had to deal, you would have been like happy, oh yeah, we're finally going up, just to reverse back to the bottom of the broadening formation. So just because you're at the bottom or the top of the broadening doesn't mean like, okay, it's time to reverse now. I mean, look at SPY. We've been at all-time highs every single week. We make a new all-time high. Like we've been chilling at the top of the broadening formation. We still chilling here. You get what I'm saying? So that doesn't necessarily just mean, okay, go short now just because you're riding or at the bottom or the top of the broadening formation. I usually wait for that actionable signal that tells me, okay, maybe you might want to do something now. For me, for this trade, and a lot of you guys are well with this CMG trade, when we had this 1-3 on the weekly chart, this was my indicator that, okay, we could possibly start reversing right now, because it seems, because you're finally getting a candle close above this supply zone, right? Wick, finally get a candle close. So I'm like, oh, maybe you want to start reversing right here. And the 2-week chart, this is the 2-week chart, 50%, 2-week, okay? So maybe you can start reversing right there. Broadening formation. And then what happens? I think we sweep right there. And then we finally reverse back to the upside for CMG. So it's everyone's going to have their signal or their confluences that tell them, oh, this could be the potential reversal for CM or for whatever ticker that you're looking for, whatever the confluence is. But just know that you could, and I call it riding the broadening, when they're just riding that broadening from it, they're just sticking to it and they don't want to break away from it. Like, bro, come on, hurry up and break away from the broadening from it, reverse it back to the upside. But if plays can just ride the broadening formation for as long as they want, and you would want to be looking for a reversal signal that's telling you, okay, now time to take it back to the top of the broadening. All right. Hey, appreciate you, Alien House. Hey, appreciate you, Airman Eric. Jackie, since you have a template for OBF, do you keep them on all your charts, or do you hide them? I keep them. I keep them on all my charts. I do. But I will be honest, you guys. You know how like trend lines, they're kind of, what are they like? You can give what do they call it? The eye test. You know, like you can do the eye test with like support and resistance lines. So if you ever are looking at my screen and you're like, oh, doesn't he trade strat? Why doesn't he have any broadening for me? Bro, you know how many people said that to me? And I'm like, really? Like, really? That's the little definition of me trading strat because I don't have a broadening? Yeah, it's fun times. But anyway, you can use the eye test as well. So like, this, even if I didn't have this line here, but you can probably see like, why is it that price is not really like breaking below this level? It's kind of just like staying below this level. Well, this is probably a broadening formation right here. hopefully that helps. So yeah, I like to keep them. If I draw a broadening, I'm probably going to keep it on my chart. Like the only reason why I'm taking it off, you know how when you switch between time frames and trading view will make the broadening formation a straight line? That's the only time I have to take it off because visually it impairs like the chart for me. But other than that, if I'm drawing a BF, I'm most likely going to keep it on. Yeah. What will be your target when you are in outside bar at the top of the BF as the price was going up even? See, great question, Snowflake. You don't necessarily have a target, especially if you're talking like in terms of strat. You don't have a target because you are in price discovery mode or price discovery territory. You can use fib extensions, but I'm not even that great at like plotting. I mean, I'm good. I know the generalization of fib extensions, but I don't do it enough to be like, this is how you do it. It has to be this point and this point, and then that's how you draw your fib. So, but I just know that you can use fib extensions. So there's probably like a YouTube. Actually, if anybody has a YouTube video on like a way that they use fib extensions, we can like please share it. But yeah, hopefully that makes sense. It's price discovery. You don't know where price is going to go. And so that's why, Snowflake, when we're at the top of the broadening, I'm hesitant to take new calls, right? If I've been swinging a position from like a week ago, or because that position just triggered a 2-1-2 up on the weekend is going into all-time highs, that's fine. But if I'm at all-time highs or we're past all-time highs, like I'm really hesitant on taking a new position. I would want to pull back first before getting into that new position. Or ideally, I want to take something at the bottom of the BF. In reality, I want to take something at the bottom of the BF, really. Alien House, this might be silly. Do you only drive BF wick to wick, never to body back? This is not a silly question at all, Alien. That is not a silly question at all. I draw them from wick to wick. I don't know if there's any significance to drawing it to the body, but I draw them from wick. I don't know. I wonder if body means something. I wonder. Probably have to watch like a trading video. I wouldn't know. But I draw them from wick to wick, and I recommend wick. I have Eric. Do you keep all the hey, bro? Good shit on that rock, my guy. Good stuff. Do you keep all the BFs the same color, or do you separate them by color? Oh yes. So I separate them by color. So this is okay. So I know you guys are gonna look at this like, oh my gosh, what the heck? Yeah, I know. Don't nobody say anything. But this is my spy chart. My purple, magenta, whatever you want to call this, the purple, whatever. Yeah, purple. This is my weekly BFs. My blue lines are my daily BFs. My yellow lines are my monthly BFs. And where's my blue line? There got to be a blue line, a dark blue line, dark blue. Where's my dark blue? I don't got no dark blue. Does Cat got some dark blue lines? Costco? There we go. Costco got some dark blue lines. Okay, my dark blue lines dotted are quarterly BFs. So I color code them. And I know they sound crazy. Y'all like, whoa, this is a spider web. Man, you know how many times Costco been bouncing off a quarterly BF and I'm like, time to go long, and it's like a quarterly move? I'm telling you guys, it works. It works. As a matter of fact, did I take a trade here? Yeah, I did. Did I take a trade? This is back in 2024. Because of this broadening formation. Because of this golden broad. I'm not going to leave this. I'm going to keep this on the chart. Because of this golden broadening formation. Yes. How can you see all that? Yeah, it's really something you develop all the time. You know, like how like you like it's just habits. Like with strat at first you're like what, but then now it's like you can't unsee it. I think it's like just that. Like you will. This is what's cool. You are gonna understand how you like do things, right? So it's like how you draw. That's why everyone's chart is different. Like how you color code, how you draw your stuff. Like it's going to make sense to you. And I promise, if y'all color code your BFs, you're gonna the way y'all do it, want to do it yourself. You're gonna understand it. You're gonna understand. And also, like I don't want. Oh, we got hot mic.
Yeah, I did today.
Oh, hot mic. I don't want. Like you don't want it to be confusing for you. So like if someone were to ask me, whoa, hey, is this confusing? It's very, whoa, that's a Costco chart. Like what the heck? And I'd be like, no, not at all. This is not confusing at all. Every line makes sense to me. You want it to not be confusing to you. So that's why broadening formations are subjective, but subjective to you, right? Some people draw broadenings from swing highs to swing highs to swing lows to swing lows. And some people draw it from just 3 bars. Like they only will draw it from a 3 bar or compound 3 bars. Hey, whatever works for you. Whatever works for you. Yeah, people are like, wow. Yeah. All right, y'all. So that I think, which timeline be useful in long-term and short-term trading? When you're bouncing off of yearly BFs, I think I had one for, was it Pepsi? All right. So when you look at PG, this is on the weekly chart. It looks like it broke down, right? It looks like it broke down. However, there's a broadening formation right here. And if you see back in 2025, when it got to the broadening formation, it went from 158 to 180. When it went back to the broadening formation right here, it went to 170. Actually, we can extend this all the way back here. I'm tripping. This could go all the way back here. So every single time it comes back to this broadening, look what it does. Boom, 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 right? Now you broke through. Oh no, the trade is over. PG. Nope. Psych. Look at the 3 month. The 3 months saying no. We still this could be the sweep that was needed to take it back to 185. So I say this because the bigger the broadening formation, right? Same thing. The bigger the broadening formation, the bigger the breakout. So the broadening formation, in reality, this is a quarterly BF. If PG can hold this quarterly BF and you can hammer off of it, you already know what I'm going to say about PG. But the reason why I'm saying this is because the higher the time frame you draw that BF, and if you can use that support or resistance, the bigger the move that can happen when you come off of that support or resistance or broadening formation. So in terms of the trend, in terms of the time frame, it's dependent on it. Draw it on the time frame you see that broadening formation on. Right? And you wicked off OTE. I'm telling you, Procter and Gamble. Procter and Gamble. I know y'all be going shopping. I know y'all got some PG products in your house. Anyway, so that is the broadening formation presentation, y'all. This is recorded. It will be available for playback. Just let me post it and upload it on YouTube. Hopefully this helped. And yeah, I'm looking forward to the next beginner and training Q&A. All right, y'all. You guys have a wonderful night. I will catch you all tomorrow. I'll post a watch list later tonight. We got PPI in tomorrow. Gonna be gap up or gap down, depending on what that is. And let's get ready for CPI the following day. All right, y'all. Have a good one. Hey, appreciate you, Abby, for coming, bro. I see you, man. Okay, look at him, y'all. He didn't have no soccer game today, y'all. Look at him. All right, y'all. Have a good one.